Getting a mortgage is hard. I mean, you need tons of money, your credit must be flawless, and don't even get me started on interest rates, right? I mean, you've had those thoughts before. I know that because I've had clients say it to me. And don't get me wrong, there's a lot that goes into financing a home, but it may not be as complicated as some are trying to make it out to be. Well, hey everyone, Nicole Ruth here, your go-to mortgage guru with the Ruth team at Movement Mortgage. Today, I want to pull back the curtain on some of the insider home financing secrets that everyone contemplating buying a home or refinancing should know about. So let's dive in. Mortgages sound fancy and complicated, right? But boil it down and it's just a loan. I mean, think back to when you got your first car. At the onset, it seemed overwhelming. But once you got into it, you realized that it was much easier than the process sounded. Home financing works the same. But here's where it gets tricky. Not all mortgages are created equal, and not every mortgage expert truly lives up to the title of expert. I've navigated the labyrinth of this industry, and I'm here to guide you through the good while sidestepping the bad and the ugly. So here's your first home financing secret. Down payments can be much more approachable than they sound. Most people today know you don't need 20% down to purchase, although that's one of the myths. What a lot of people don't realize is that you can actually get grants or silent second mortgages from down payment assistance programs that will alleviate the total cost of your down payment. And depending on your credit profile, those programs can benefit you with discounted interest rates. Wait, what? A better interest rate and no money down. But to harness these opportunities, you need someone who's familiar with every nook and cranny of these programs. Your next secret? Your credit score. Yes, it's important, but it's not the only key to your castle. We can work with what you've got, and if what you've got isn't stellar, there's no judgment. There's a path. There's a pathway to improve your score. I mean, we all know that most loan programs, especially conventional, require at least a 620 to begin with. But even if you're lower, say you're 580 to 600, we have a boost program where we can run you through to instantly get that taken up a notch. Additionally, if you work with the Ruth team and need credit repair, we will reimburse you the cost of that monthly credit repair up to $600 at closing. That's 6 months of work. So there's nothing to lose. And lastly, here's one people know, but I'm not sure it's really sunk in, so let me bring the point home. And I'll say it again. The interest rate you often see plastered everywhere isn't always the rate you'll end up with. There's a ton of fine print, fees, and qualifications that get overlooked. Often those rates are based off the best case scenario, which most people aren't, and they often include buy down points. I mean, don't get me wrong. It makes our job a lot easier when every loan is straightforward and the perfect loan, but that barely ever happens. Now let's talk about myths. One I often hear is the belief that one needs to be tethered to the same job for years to qualify for a mortgage. I mean, I get that all the time. Well, I haven't been on my job for 2 years. But that's not true. Lenders appreciate stability, sure, but they're more interested in your overall employment history and future earning potential. So even if you switch jobs or even fields, as long as there's a track record of stability and income, there's always a way. Speaking of jobs, if you're your own boss and you're self-employed, there are also creative ways that we can work the system for you. But the sooner you connect with a lender, the better. Because as self-employed, how you do your taxes and how you structure your pay can greatly affect your qualification. So having those conversations before and knowing what you're walking into at tax season can be a huge help. Student loans may also be holding you back, but don't get discouraged and don't dismiss getting a loan, as there are even loan programs crafted specifically for those with student debt. Before we wrap up, a word of advice. After getting your mortgage approval and before the final closing, please hold off on any large purchases or accumulating more debt, as they can throw a wrench in your debt to income ratio. And honestly, getting that couch or that new bed for your new home isn't worth disrupting the mortgage approval or not getting to the closing table. Save the celebrations for after you've officially snagged those house keys. So why entrust me, Nicole Ruth, with possibly the most significant financial decision of your life? Over the years, I've seen both the highs and the lows that clients experience. The joy of getting the keys to the dream home, knowing they've secured the best deal, is unparalleled. Those moments are precisely why I'm in this line of work. For the Ruth team, this isn't about mere transactions, it's about real people with real dreams. Every consultation, mortgage, and refinance is personal, because it's not just any house, it's your home. To conclude, the ideal mortgage isn't solely about numbers. It's about collaborating with someone who not only understands those numbers intimately, but also deeply cares about turning your home dream into a reality. If you're ready to plunge into the dynamic world of home financing, or if you just got questions that are gnawing at you and you need the answers to, I need you to drop them off in the comments down below. And if you want more mortgage insights, myths, and truths, hit that subscribe button. Let's make your dream home more than just a dream. It's a plan waiting to happen. Until next time, I'm Nicole Ruth, and I look forward to going to work for you.